Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's see what we have. First of all, we look at the cycle chart because here we saw a weekly cycle low signal flash. It is not fully confirmed yet. The indicator flashed because of its programmed code, which not only uses a trend line, but also momentum. Whenever it flashes, it seems to predict the low being in based on several factors. In a bull run, whenever this flashed, it was either the low or very close to it. I also played around with the indicator, and whenever it flashed this signal, that level held. That doesn't mean it will always be like this. In a bear market, we obviously print weekly cycle lows, but they often only hold for a period of time before breaking down. In bull runs, however, when this flashes a weekly cycle low, we usually see price hold that level. I counted all cycle lows in bull runs, at least all the ones I could identify on the index chart using this indicator. It flashed 29 times and only 2 times failed during bull runs. Those 2 failures were during the Corona crash. There, we had 2 weekly closes below the level, and the second one was the actual bottom. What that means is that there is roughly a 90% chance that the level holds on a closing basis. A wick is fine, but 90% of the time there is no close below the low. I also checked how often the level gets retested after the cycle low is set, and it's about 45% of the time. That means slightly more often than not, price does not even retest that level. By retest, I mean trading at the same price level or forming an SFP. Of course, the chance is there, but with 45%, it's close to 50-50 and not very useful on its own. Still, I track it to see how it develops over time. There is also a 10% chance that we see a weekly close below it in a bull run. In those cases, it still formed the bottom, while in a bear market, price moved lower. So, if we see a weekly close below this low, the probability increases for another move down. Until then, I look at this area with the 90% probability that says a close below is unlikely unless it actually happens. Keep in mind, this is purely based on the weekly cycle low levels. For now, the indicator has flashed the signal. But for better confirmation, we would need a break above the downtrend line. Even after a breakout, a retest is still possible. Price can break out and retest the trend line, go lower, and still remain bullish. That's something we need to keep in mind. Once the break happens, we also need to see whether price breaks above the horizontal SR level or if it fails. If it fails, we can look for a retest and possibly a sweep of the local lows. Based on the cycle low stats, that retest is roughly 50-50. This low could easily become a target later before price moves higher. Once price breaks above the trend line and the SR level, I would aim for higher prices. I know many people are currently looking for a move up and then back down again. And yes, that can happen. For me, however, I have higher targets, at least 112K, based on other reasons. That doesn't mean others are wrong. They may be right based on their own analysis. If I'm wrong, I will say it when it happens. The second confirmation I want to see is weekly momentum crossing up. If we switch to the weekly time frame, we can see that momentum has already crossed up. Last week, the pivot was at 85K, and the weekly candle closed above it. As long as weekly candles close above 85K, momentum remains bullish. Historically, in a bull run, this leads to higher prices. In a bear market, momentum rises but forms lower highs, which is what the bearish side is focusing on now. Bears are mostly looking for a dump from here, as usual. For me, I'm still looking for a move up, which I've said throughout this whole period. I wanted it earlier, from the first support area, but that failed and price moved to the next support. Now we see different signals flashing for a move up, and that's what I'm trading toward, with a target of at least 112K. There are levels in between, of course, but 112K is a statistical target with a high hit rate, so I stick with it until it gets invalidated. On the weekly time frame, the candle is now at a decision point. Bears want to see it fail and move lower, meaning 1 or 2 more weeks below the trend line. Bulls want to see a close above it or a stronger push to the next level. This is often where people are too scared to trade, and once direction is clear, price moves fast into the next resistance and then ranges or pulls back. That's often where people talk about trapped longs. In reality, you can't really trap longs in an uptrend unless someone is using extreme leverage. Traders with proper risk management leave room for the market to breathe. Even if they buy the top of a candle, they are often buying into liquidity provided by sellers who want to build larger positions and add on retracements. Most trap situations come from bad risk management or gambling. I've explained what bears want and what bulls want. For me, I'm aiming for 112K, and from there, we will reassess. One more thing regarding the 4-year cycle. Many people say the cycle is already in or dead. On this chart, you can see the next year, which is where we would expect the next cycle low. We still have time. The 4-year cycle is low to low, which means price can stay flat, move down like in previous bear markets, or even rise and still hit the cycle low at the correct time. Price does not have to fall just because a cycle low is coming. I've seen this behavior on other assets and pairs. So when people say it's a 4-year cycle, price has to go down, that's simply not true. People should be careful, because many repeat what others say without testing it themselves. Most people lose money, yet most people talk. Always follow your own plan, or at least test things yourself before risking money. The same applies to bearish divergence on RSI or momentum. People often see what they want to see. Yes, price made higher highs earlier and momentum made lower highs, but now momentum is at the lows while price has made higher lows, which is actually bullish divergence. Again, people often follow the crowd, and we know how often the crowd is right. Sometimes the crowd is right, and if it works, they later say it was obvious because of EMAs or divergence. In reality, it was a 50-50 probability. Personally, I prefer to wait for better probabilities instead of betting money on coin flips. With that said, let's switch to the next chart, the yearly time price chart. Here I was looking at the FOMC dates, where we expected a reversal before FOMC, which successfully happened. I held some runners from the rabbit box, so that was a nice spot trade from the lows. Then we saw the rise and I looked at the previous FOMC dates. More often than not, we saw a reversal when price was rising into the FOMC date. Price usually hit a resistance level, and from there we saw a move down. That move down is on average around 13%, which would bring BTC back to the lows, basically a retest. This percentage can vary, of course, sometimes bigger, sometimes smaller, so price doesn't always have to come all the way down. That's why I first looked for a higher low, and only if that failed would I look for lower prices. Now, since the weekly cycle low indicator printed a signal, we know there is roughly a 50-50 chance to retest this low. That's not very useful on its own, similar to the weekly EMA. It becomes useful as confluence if other factors with higher probability point in the same direction. Otherwise, it's better to ignore a pure 50-50 situation. Of course, that depends on the situation. If someone wants to bet money on that, it's a free world. For me, I was going step by step, looking for longs at support levels. If one failed, I looked at the next one. For now, we've seen price holding the cycle level very well. I mentioned this in the previous video in the Patreon group. I said that if this circle holds, we could see a grind up on it. Similar to the first rise where price grinded up and the circles acted as resistance. Now price is testing the circles from above, and we can see it grinding up on them. Once they break down, they won't be relevant anymore for this year, because it would take too much time to come back to that level. But as long as they hold, we can see price grinding up, and if resistance breaks, we look for the next level, which is 100K. Only if we get an impulsive move would the circles become relevant again, but at the highs, around 113K. On a breakdown, the next level would be 82K. The average moves up from the FOMC date in this bull run are 24% and 69%, but usually even higher. I just used the minimum. For the low to be confirmed, we need a break above the resistance area around 94 to 95K, and at the same time the downtrend line on this move needs to be broken. Once that happens, I can look at where the 24% move and the higher moves would land. From this low, a 24% move would bring price to around 103 to 104K, and higher would basically mean a new all-time high. If price breaks below, then I look for 82K as the next level. Now let's have a look at the USDT dominance chart. Here I have two levels. One is the bull run support level, which is acting as resistance on USDT dominance. The second level is below that, which is where Bitcoin previously formed the highs. By the way, we need to keep in mind that dominance can move higher or lower without Bitcoin making a new low or high. Dominance is useful for confluence, but we must acknowledge that dominance can make a higher low while Bitcoin makes a higher high, or dominance can make a new high while Bitcoin makes a higher low. So that always needs to be considered. For now, dominance has stopped at the resistance level, and we don't see continuation yet. If we see a rejection here, that would mean upside for Bitcoin. The best case for me would be dominance moving below these lows, which would most likely mean higher prices for Bitcoin. We can see that this last low in dominance aligned with Bitcoin's higher high, so coming back down to these levels could lead Bitcoin to a new high as well, especially if dominance reaches the lower levels. If we switch to the daily time frame, we can see a rounded structure. On this type of structure, I would actually like to see an impulsive move down. Whether we get it or not is another story, but that's my observation from similar structures in the past. Sometimes it's another SFP of the high, sometimes a lower high. But the main point is that once it starts to roll over, the move down is often impulsive. That would mean an impulsive move up for Bitcoin. The local level I'm watching is the daily SR level. Once I see a daily candle close below that level, it turns into resistance until proven otherwise. That means any retest of that level needs to be watched closely for lower time frame weakness. If there is no weakness and structure keeps grinding up, then I simply wait for the next level. But if dominance rises and then starts to lose structure at resistance, that's weakness and a potential start of a rejection, which at the same time would mean upside for Bitcoin. Now let's switch to the local levels and the averages. So here we have two levels, forming an area of resistance and support. The support area actually starts below the monthly low, and I mean the support area for this range, not a local one. Basically, it's this whole area with lower time frame levels inside. For me, there is a local order block inside this area, but I acknowledge that it's the entire support zone that matters. This level is not invalidated for me just because price trades below it. What I mean by that is, if price comes down, it's still the upper part of support, and we already saw a reaction there, especially because we have some swing lows above that level, so it can just be a tap and go. If it gets lost and price wicks the low one more time, I still keep this level for signs of strength. That means if price trades below it, I want to see price reclaim the area and find acceptance back above support. Then I can manage my trade and aim higher. As mentioned before on the cycle chart, once the trend line breaks, price can still retest those levels. That would be a break, a move up, wherever that stops, and then a retest of the trend line, which could take out these lows. That would take time, so we need to see how price reacts here now. Once it breaks, I would aim for a new high above this resistance level, or rather the next target level. And I wouldn't care much if price first moves down to retest the trend line or the lows. That would simply mean I can look again for signals to enter another trade toward higher prices. For the bears, they want to see these levels lost, and ideally, no reclaim of the SR area. In that case, we can look for lower levels, like the monthly swing low and the 4-day order block below current price action. Until then, this remains a support area. Time-wise, we had a few things pointing to the end of December and start of January for a possible low. For now, the next lunar date is on Wednesday in the next few days. Very often, lunar dates time the lows nicely, but sometimes we see deviations before or after the date. This situation is similar to the previous low, where it took roughly 1 month to form the low from lunar to lunar cycle. Right now, we've seen price ranging for about 1 month, so we're slowly approaching the time window for a move or a second low to form. Could it already be set? Yes. In that case, we might just see a small retrace during that time window. For me, the monthly close is where it gets interesting again, because that's when we get new average levels, a new yearly open, and fresh monthly stats. For now, price is ranging between the average wicks for this month. The low and high were formed within the average time windows. We can see that price did not make a new low after the average time window for the downtrend, which is not bearish. At the same time, the average time for the highs is also set. These are averages, of course, and sometimes price moves outside them and still remains bullish or bearish. But based on the averages, we can say that for now, the high and low are set, and as long as neither side breaks, we may not see a new high or low this month. We then wait for the new month, where new windows open to form the high and the low. The new candle could open, move down from the low, and then move higher. On the yearly candle, we would need to see the rise. I showed examples in previous videos where the new yearly candle opens, forms the highs first, and then fills part of the wick. That would be the bearish scenario. The other scenario is a stronger rise first, which can still be bearish later. Price could make a new high and then come down afterward, fitting the 4-year cycle. The key point is that the cycle low will be hit. Timing the high is more complex and has a wider deviation range. Once price breaks above this level, I would aim for the 100K to 104K area as the next SR level. The daily swing high is higher, so that's another level to watch once price breaks the 95K area. The first SR level is there, but the structure stops sit above the daily swing high. This is what often happens in bear markets, and not only there, those levels get taken out. A break above that level would be bullish and a daily bullish structure break. What we often see then is that price looks for a higher low, which later fails in bearish scenarios. In the bullish case, we see a higher low and continuation. The trap zone for me would be higher up near my 112K target. Even on the bearish side, I would like to see that level hit before moving lower. If I see signs of a top there, I will take action. For now, I haven't seen those signs, and my strategy still targets 112K, where we also have the daily structure swing high. One thing to keep in mind, some structure traders will switch the daily swing high lower based on intermediate candles. For me, I only move the swing high lower if price makes a new low. Otherwise, it stays where it is and remains the main daily resistance. The levels in between are still SR areas and worth paying attention to. I will take partial profits from runners on a new local high and scale out on the way up. Even with runners, I have my TP levels planned. I'm also still in other trades targeting higher prices, and I'll see if I take some profits on the rise. Price has targets higher, and I'd like to see them hit. But if I see weakness or statistics indicating a higher probability that a top is forming, I will pay myself and not wait for it to fully play out. The targets will be hit sooner or later because the liquidity that created this move often remains there. It can take time, like in a bear market, but in a bull run, those levels tend to be hit faster. The strategy itself doesn't really care whether it's the top or not. But as said, if I see signs, I will pay myself and keep a runner. I won't let a position sit for a year unless price moves down significantly from here. In that case, we would be closer to a bottom, and I wouldn't sell at a loss. No financial advice. Everyone has to manage their own capital. For me, it would be fine to hold longer. And if BTC goes to zero, that would be a losing trade. So always manage risk properly. With that, let's switch to the local levels. Here we have the averages for today. The average loss is below the weekend lows, and that is a daily SR level. If you pull that area to the left, you can see how it acts as an SR level. That means if price comes back down, I would look for a setup like an SFP, a reclaim of the level, or whatever you use to manage a trade. Best case, it would look like this, a move down and a reclaim of the weekly open and this area. That would be a sign of strength, and then we can aim higher. The same applies for signs of weakness. If we see price rising now and then a rejection, for example today at the average gain, which by the way sits at some structure stops, and then price moves below that level, I would aim for a move below last week's low. Until then, it is support. Whether you want to trade that or not depends on your plan and whether the conditions for your plan are met. Something to keep in mind. Once price hits the upper level, this lower level can act as support. That means for a short setup, you would need to secure some profits on the way down. No financial advice, but on an SR level, price can make a higher low and move higher. For myself, That would be a TP level, and I would let a runner continue if the level does not hold. Level to level. For a swing trade, the invalidation needs to be wide, and then you don't really care about the local ups and downs. As mentioned in the video where price was hitting the 3-month low, that was a good place for a swing trade because the invalidation was very close, basically below the 4-day order block. That invalidation remains for now, but price has already moved up, so opening a swing trade from here needs to be managed properly for both the upside and the downside. A long or short swing trade from here cannot be invalidated just by price moving below this low or above the current highs. The invalidation on both sides needs to be wider. Now, the 4-hour candle is closing soon. If it closes above, that would be a bullish break, and the new swing low would be today's low. That means price can make a higher low, and an SFP is allowed to keep the structure intact. A break below would be a bearish break, so both sides need to watch this area. For confluence, we have the mid-range, mainly the 50% retracement. If you pull a fib from the lows to the highs of this range, you get the 50%. And lower, we have the 75%, which are both levels to watch on a retrace. Another local confluence is the point of control of this range. Keep in mind this range has not broken out yet, so the point of control can change, but for now it's sitting at the daily SR level. That's the confluence for this area. If price breaks below, then we look for the next area, which is the lows and the 75% level as confluence. To the upside, if price breaks above this area, I'm looking for the 95K area. For now, I'm waiting either for the levels to get hit or for Monday to form, and then we'll see what we get in New York or toward the end of the day. Price often forms the high or low early in the week. In a bearish case, we could be forming the high of the week now. In the bullish case, the low of the week is already in, or if price moves lower, we could see an SFP of the Monday low on Tuesday, which would be the 4-hour swing low and SR level, followed by a move higher. So everything step by step, watching for the signals and the next level where a setup can form. Until then, I stay in my other longs. I hope this was helpful. It's not really something new, as price is still in the same range, but you can see that the plan remains the same. On local levels, we can leave some runners once we have a trade, whether you're bullish or bearish. By the way, if you want to test the rabbit box strategy or get a standard journal or my monthly stats sheet, you're welcome to join the Patreon. Until then, I wish you a nice day and see you in the next one.